love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again!
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello, everyone, and welcome back to the show. Today, Nick is not here, so I'm here. Just call me Dr. Nick. We are seeing some quite aggressive move at the moment on dollar, and I have in my ear, there has been some news that China has gone to Russia to ask about how to deal with sanctions because they're thinking about invading Taiwan. On that note, what else is going on in this crazy world? Well, Biden has apparently pardoned his son Hunter, so the world is complete. If you have any trade ideas, any directions you want me to discover or discuss, that'd be great. I just want to put out that I previously this morning did have a short on euro dollar at about 105.30 or so. Can't remember exact price, but somewhere in that direction. I'll get back to it a bit later. So what happened to Nick? He's locked up in a closet in chains. Sorry. So, as discussed from many weeks ago, I said from about the beginning of election, we should be bullish on S&P 500. So the question I've asked earlier today in the mentorship group was, is this a buy area? Hans, I am Nick. I'm called Dr. Nick. So in that scenario, what's the reason for S&P 500 going higher? And the most important thing that I want to have as a theory is everything is okay in the market. Nothing is crazy. Nothing is doing too many crazy things. I just mentioned that a bit earlier. Everything is crazy. In the market, it actually isn't. And US manufacturing has just been posted, so let me go over there. Do apologize for being a bit late on that one. But, sorry, wait a minute. Why does one say it's in 30 minutes and then one says it is? Okay. US CPI is supposed to... How is that supposed to be? What's going on? So, I can show you what I'm seeing. At least this one says that the final PMI actual from S&P was 49.7 instead of 48.8. So that's a bit better than expected, and dollar strengthening. That's probably the reason. So I don't know. What else are we waiting for? Don't know at the moment. So everything is great. We are going back to 49.7 on manufacturing PMI. Everything is fantastic, meaning you are allowed to, in my book, or as I'm going to, looking for pullbacks on S&P 500 by next week or by the end of the week to go higher. We are in a month, meaning there's opportunity for a bit of a deeper pullbacks, nothing too crazy, but that's my overall direction. And why is it so? Because Trump is going in to be the president. He's going to go lower taxes. He's going to go higher on the tariffs, which is supposed to boost the U.S. economy, also make everything more expensive. It's, generally speaking, a good way for the S&P 500 and the stock market. So therefore, I'm still standing on my bullish stance. Yeah, so people, Nick has been making so much profit. I'm so jealous. I just need to get out of here. Did he injure himself? No, I locked him up in chains in the closet. So he'll be coming. He comes out later when I let him. So that means dollar, in my theory for December, should go higher. Thank you very much, Lemrin. Happy to have you here for a very long time. So that's my theory. Dollar should go higher. We have done a bit of a reversal. And the first buy this morning was that one. What I didn't mention, or what I didn't do, I didn't sell Australian dollar, US dollar. Even though we overall have a very nice bearish trend, we also have a bit of a pause at the moment. And we all know how I am in real ranges. It is not a great place to be. So I'll let you soon pass. The euro dollar, in my view, for the end of 24 kind of view, is that we are going to go down to, is it 102 or so, probably? Is it 102? Well, I'm just checking the pivot points, but my theory is 102, and the pivot point says 105.50. Well, I'll give you that. So, in the theory, given that we're currently falling, we don't break below 103, your chance is again coming back up to 106 or 107.50 before going lower. So don't worry, because what I proved to the group last week was that oh no, did I remove it? Really? Okay, let me see if we can find it. It's probably far away. No? Okay. So what I did was last week in the mentorship group, I put some trades on euro dollar, and I said, what happens if we buy, what was it? Current price, first pullback, that one. That also got stopped, and then another lower pullback, which was about, we see that level there, and then one down here. Sorry, one down there. So the first two ones, the two aggressive ones, got stopped out. The second one, that was about 50 pips, 50% pullback or so. Sorry, that was 23.8. Sorry, my bad. 38.2. Pullback was the winner chicken dinner, and then it was about target about 105.90 or so. So it looked like this. That's what I mean by what you guys are supposed to be doing out there. Yeah, the ISM manufacturing is out at 3 p.m. I don't know. I just saw them. I just saw my financial juice that it was already out. Basha, you're going to ask me every single day in December why I haven't dropped it on Discord. because you have to hold me in my ears. And I apologize. I am a horrible version of Nick. I'm sorry. I will after this meeting. And December is going to be so great, Pasha. You're going to be so proud of me in January, okay? But every day I'm going to be accountable to you. I apologize. It's been a very messy lately. I apologize. But yeah, cool. So, do you think the Fed this time will hold rates? Actually, Simon, you are a fantastic person. I love you because that's where I wanted to go. We have 16 days until FOMC. Mark is currently pricing in, well, a slight chance of a rate cut. Do I believe we're going to hold? I don't think we're going to hold. And the reason for it is quite simple. If Edgefinder now works great and I go $2, and we have about 2.5, 2.6 inflation, we are about target. Has Adam, I don't know what that means even. Can somebody send me a voice? If that's an annoying person, I feel honored. Ottoman says seasonality is $1 bullish. Yes, that is the problem. So I will come back to that. So for the strengthening of dollar, for the rate cuts to happen, this one should be below 3, and it's below 3. And we currently have interest rates about 4.45, which is about 2% above the current inflation, so they have to do something. So I think 4.25 to 4.50 is a better range to be at, because inflation is about 2% lower. So it needs to be, because if you understand, when inflation and interest rate is differencing, it's just my theory, by the way, it's differencing more than 2%. Central banks generally across the world react. So it's kind of like, it seems like behaviorally that's kind of a place where they start to move again. Now, if that's your theory, let's say your dollar going to be is euro dollar bullish seasonality versus fundamentally euro dollar bearish. What do you do? Well, you're going to pick one theory, or you're not going to trade at all. I believe that we're going to do first 2 weeks lower, or whenever we hit 102, and then go bullish. So you might have both at the same time. It should be opposite, by the way. But with the current view, with the current world, I don't think that we are able to do those things. Do you have any potential gold from a fundamental point of view? I believe if you are in the VIP group in Discord, I had a long discussion about that. But yeah, cool. So I need to get going. I have 4 minutes. 4 minutes left. Come on, guys, go. Australian dollar falls without me. Euro dollar, I sold 105.30 or so. Need to check price later. Pound, same situation. Potentially pull back tomorrow. Then short. Should have sold that one. That was about half an hour ago. Okay. New Zealand, same situation. This is micro. This is also range. I don't like that. But it's kind of like when you fall and then you have a pullback. So then tomorrow morning or so, or London open tomorrow, sorry, should be maybe another opportunity. Dollar CAD, I don't know what is going on here. Don't even tell me. Yen pairs are falling off the face of this earth. I have lost so much money here last month that I cannot even tell you. It's true. But it is not bullish. It probably is going to be, it's probably a fundamentally bearish, if you ask anybody else out there in the finance world, probably a bearish outlook on CAD yen, euro yen, and all those things. I just didn't see it coming. What seems to be the issue is JPY, or Japanese, are closing their bond purchases, meaning selling their dollar or selling their positions and buying yen. It seems to be an outside force, outside of the monetary, outside the risk, outside of that. It seems like, to me, it's a what I would call a positioning move, a tactical move, more than anything else, in the preparation for Japan to increase their interest rates in about 2 weeks. What is your opinion on speculations on Trump aggressive impose of tariffs if we do expect Fed to change course? Yes, that's what the market is currently doing. The market is currently pricing in higher interest rate next year, lower pace of cuts, and aggressive new tariffs. So, am I expecting an intervention soon? Sean Gibson, you sounds like a very lovely person, and you're going to get one of my last questions, by the way. No, the reason why is if dollar yen would be about 160 or higher, then yes, we are very close to being intervening, because we were at 162 last time it happened. So as long as yen is strengthening as it currently is happening at the moment, they don't. But if yen was weakening rapidly and was doing that kind of trend, then it would be in a very serious, horrible situation. And yen would, because the thing is that for businesses in Japan, which is trading somehow, or just even not even trading, just accepting the oil, they have to spend so much extra yens, which I think yen has had at that point fallen like 30% in a year. It's horrible for businesses. And it's so unpredictable because all of a sudden you can't travel because one day it costs you, let's say, half of your salary or a month's salary. And tomorrow it's going to be 60%. And the other day is 70%. All of a sudden it's a whole month's salary just to travel. And that uncertainty just makes people, especially Japanese people, not able to travel and do normal business because how can you even trust the exchange rate by tomorrow? So, gold fundamentals in my world is higher because as long as we still have falling inflation, as we still have Trump, as well as we still have all the risk in the world, if China goes into Taiwan, as long as we have the wars, as long as we have falling inflation, as long as we have, what was the other one? As long as we still have lack of growth in general, and as long as we still have China lack of growth, and even as somebody mentioned, maybe BRICS using gold as their means of payment, my overall is bullish, gold bullish, but currently it's not a great technical place. All right, then you said PMIs are out, 48.8. It's better than expected, but still below 50. So, okay, cool. Yeah, I think that's enough for me. Hope you guys have a lovely day. Boom.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
There we go. Hey, everybody. Chandler, the editor here. Just stalling until hopefully Chris Pulver shows up. We had a bit of a moment of, oh, Nick might not make it today. So we were scrambling last second to get some folks on the show, and, holidays are ending, and, well, we'll see if Chris shows up. I was told he's available, so we're going to find out. But in the meantime, you're going to have me. So I'm just taking one last look at the old schedule here. And is Nick going to come on? Probably not. Nick is still away. He is not. He is not around at the moment. I'm getting messages here. Okay, yeah, we can just loop something. Oh, I see. Chris is not going to be here for another about 10 minutes. So I'll talk for a little bit, and then we'll just loop a thing and play it until Chris shows up. You know, it's holidays have ended, so we're getting back into the swing of things. I even forgot we're working remote today because I'm in the office. I'm the only one in here. But I showed up, and there's no one else in the room. So I hope anyone who was in the U.S. had a good Thanksgiving. I know I did. Had a lot of food, maybe too much. But Christmas time's rolling around, and if you saw our re-theme, does everybody like the new Christmas theme? It's kind of neat. It took me a long time to make that prelude thing that will probably run on a loop here in a minute. But you know, this is one of those situations where holidays have ended. Everybody's kind of getting back into their routines, but I gotta say, Black Friday. I hope y'all enjoyed Black Friday. That was really cool. A lot of people were able to get their hands on the product, and if you didn't, in the time that Black Friday was happening, you know, maybe there'll be another sale here, but you can always contact one of our sales reps, and they're usually pretty good about working stuff out with people, if you know what I mean. So that's never a bad idea to contact them, and just, you know, getting one of them on the phone is it's not a bad idea if you want one. Hint, hint. But yeah, so in about 10 minutes, we'll have old Chris Pulver on. Yeah, it's just one of those times where it's like, well, the roster's short, and we're working with what we got. Is there going to be a long stream for Wednesday's FOMC speech? Is that happening Wednesday? Because if so, then I would assume that would be a yes. Is that happening? Yep, he speaks at 1:45. I'm sure we'll figure something out. Yeah. Chances are, yes, probably. Okay. I'm going to run a thing. We're going to run the little Christmas video, and because I've really got nothing else to say. I'm not the charts guy. You don't want me talking about markets. That would be a bad idea. So we're going to run the Christmas thing for a little bit, and then Chris Pulver will join the show, and we'll see y'all there when that happens.
Frank, I love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again!
was the night before Christmas, and all through the house, not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Hey everybody, nice to be back. Man, it seems like it's been forever. It's been a couple of weeks, and celebrate pars. No, I was just in some nice weather the last couple of weeks. I was at a golf tournament / conference in Florida, and then I traveled for a conference in Australia. So I got back last night from Melbourne. My body will adjust to the weird schedule because that was a lot of traveling in a couple of weeks. But nice to be back. I'm not going anywhere for the rest of the year, so let's grind. Let's finish the year on a positive note. I added a trade this morning in the Pulver alerts on ES. So I'm looking at a bit of hedging this week just in case. It's an income play and a hedge play sitting here at the 54th all-time high of the S&P, which just notched today. Just reviewing last week, we had limited trading. This was Monday, Tuesday, Wednesday, and Friday. There was no U.S. trading on Thursday because of the holiday. Friday was also limited hours. So prices were cut off by about 1 p.m. The first thing I also need to do is jump into my platform and add in a trade on JD. So let me switch up here, jump into the comment section. All right, thanks, Lee. I appreciate that. And good morning, traders. Nice to be with everybody. So there's the trade that I put in on ES. I sold a 60.50 call and bought the 60.55, did a 1-for-1. Right now, price is sitting, at my level. I was looking at a broken wing. Actually, you know what? Let me see if I can price this out a little bit differently. So is it worth doing a broken wing if I can go to this Friday? And actually, you know what? Let me go to Friday or Monday. Monday should be the 9th. If I put in a broken wing, that'd be a butterfly short call. Yes. And then I'd use a skip strike strategy. So if I were to, I know why it's backwards, because I want to go long call. There we go. Now I'm selling the middle. This should be a little bit better. There's my skip strike. This is way better. This is the trade that I wanted initially. Okay. So I take this trade for Monday next week. I'm risking about $1.37, hopefully $1.25. I get $2.50 credit. That's not bad. I risk $1.25 to make $2.50 credit, which isn't too shabby. So I've got more reward than risk offered up on this trade, and also have a potential profit trap if I am right. With the broken wing butterfly looks like this. So if I have price. Let's say price stays right where it is. So this is going to be a little flag here for real price. So LP for live price, right? So if price goes up, it goes up a lot, I'm going to lose on this trade. If price stays where it is or goes down, I make my $2.50 credit. I also have a credit, profit trap, and then my risk. So I get paid on the trade. I have a profit trap on the trade. Price would have to go well above these highs to all-time highs for me to lose on the trade, right? So there is risk, but if I can get this one for, I'm going to see if I can get $2.50 out of this trade as well. So $2.50 on this one. This will be for Monday of next week. Is that where I want it to be? 1 second. What's next Friday? The 12th? What news do we have coming out next week? We should have inflation news next week, if I'm not mistaken. This week we have PMI numbers out of it's U.S. manufacturing, U.S. services. We have ADP non-farm. We have non-farm on Friday with CAD. We have OPEC meetings this week as well. Let's see. Let me go out to next week. Next week is when we have our core CPI month over month, year over year on Wednesday. We should have PPI on Thursday. Yep. So we have our inflation data coming out for the US. We have Swiss National Bank policy rate decision that's not showing a forecast right now. Oh boy, we got a couple weeks of pretty big news here. All right. So I'm just considering that for if I go out to next Friday, put in this strategy here. Let's go long call fly, and I do a skip strike. That puts on a little bit more. That puts a bigger profit trap, which is kind of nice. That gives me like a 3-to-1. $2 credit, going 10 wide by 15. Ah, that's why. If I went 20 wide, let's see. I'm going to mess around with these prices for a second. So I go 10 wide and then 20 wide. $300 risk. How much do I like this trade is the question I'm trying to answer. So that's 10 wide. That would be 15. That's 20. That's not bad. Let me see what I pull in credit. So I get $200 if I'm right. I'm risking 287 max if I'm dead wrong. I've got a profit trap. That would be if price stays exactly where it is for this week and next week. If we struggle to make these highs, I have that profit trap, but I'd be waiting for this one. There's no assignment risk on this. To the downsides where I'm looking for price to go. This isn't a bad trade here. What is this? This is a broken wing butterfly strategy I'm looking at for a hedge on the S&P futures. So let me see if I can pull in. I'd want to get like 450 credit if possible. 450 credit. Yep. So I try to get 450 credit on this trade and let that just marinate for today. So I'm gonna put in this trade. So I'll give you the legs here in a moment. This will be part of the pulver alerts. I'll throw it in. This is going to be in the futures section of my pulver alerts. I'm going to try to get 450 on this trade. If I can't get it filled, the next price is 445. I'll kind of finesse this down a little bit. So let me see what this ends up offering me up as far as price and fill. So 450, not filling, 445, 440. I'm not taking less than 425. Actually, you know what? I'm going to leave it at 450 and just let it go good till canceled. So good till canceled. Okay, so I've got it pending at a buck. Good till canceled for a 450 credit. Give me a little bit of wiggle room right there. All right, so I'm going to make that similar order. Ready to get this filled elsewhere. Similar order. Off we go. Okay. Seven, 2. Okay. All right, just going to get this pending. All right. Dave, if you're watching, you got to get this account with futures, dude. You're killing me, Smalls. I need this account traded for futures. All right. 1 second here. All right. So let me get that trade posted in alerts, get a screenshot up there as well. And that is a December 12th expiration. Going to the alerts. This is going to be under futures trade as well, /ES. 12/12 expiration. At 60.50, at 60.80, and 4.50 credit pending. This is also S&P 500 hedge income play with a skip strike butterfly strategy. So I'm looking at about $275 risk. Max risk per contract, $225. 225, yep. So 225 tail credit, and should be 725 profit trap. All right, now we can start cooking with gas, get some other trades talked about. I need to get into some JD and some OXY positions. All right, and I'll throw a screenshot on there. So looking at hedge, throwing a line in the sand. There we go. So as long as price, highlighter, green, anything down there offers some profit, and anything up here is my small little risky window. Risky business. That's the trade. Okay. So one more thing on my end. I have JD, which is a China play at 37.63. I had a $40 called or given a full credit last week. We're trading. We opened up around $38 today. We're at 37.63. Let me find my quick break even, and then the time we have left together, which I can go. I don't know if there's a guest on at 11:30. I can roll out until like 11:15 or so today. I want to look and see what my break even is on JD. My break even is 38.30. I just want to collect some additional income positions. Let me go to all accounts that own the shares of JD, which is right here. So I have 1, 2, and 3. Got it. Okay. So I have credit spreads, naked puts. Those are all looking good for profit. And in the own shares, I'm just trying to work my cost basis lower. Anything above 6,000 on New Zealand dollar looks good for profit. Let me do a quick spot check on that one. If I'm long on, if I'm long on New Zealand dollar, anything back above 6,000, 6,000, 60.50, that's my profit spot there. Okay. All right. So if I own the shares at 38.30, I'm going to do some work on adding a covered call. So if I go out, let's see what this Friday looks like. 38.30, I can go 38.50. Want to try to make a few bucks here. let's see. Could I get what's the expiration before the 18th? So before the Fed, potentially the Fed can disrupt the entire market for the rest of the year. And I just say that because let's say that non-farm numbers aren't super great this week, but they're fine. It's not like gangbusters bullish. It's not bearish. It's just like they just print numbers. Next week, inflation numbers that then change the Fed rate decision tool. Will they cut rates on December 18th? Will they not? So point is, if the market's going to have a bit of a hiccup before the end of the year, I think it's going to be the Fed is maybe that potential catalyst that creates it. So if I'm going to collect any premium, I'm going to try to collect that premium prior to the Fed on the 18th. So I'm going to go out to the 13th for JD. If I could do a 38.50, that's enough for me to get it called away at profit plus pull in another 83 cents. So I'll go ahead and do that, lower my cost basis. So now I go from a 38.30 ownership minus another 83 cents, 37.47, get it called away at 38.50 times 500. So I make 515 income. If it gets above my 38.50, then I can roll it, which is not a problem. If I put it up to 39, that's a few more cents there. So 38.30 minus, let's go 68 cents, get it called away at 39, $1.38, 690. Let's see. I guess I just want to lower the cost basis a little bit. So let me go 38.50 here for 5 contracts. So I have JD shares and I need to cover them. So I'm going to cover them here. 1, 2, 3, 4, 5 out to the 13th. See if I can sneak out 85 cents perhaps. 85 not filling. Let's try 84. 84 not filling. Bid is 83. Fill the 83 cents. Okay, so now this account 111 38.50. Fill the 83 cents and similar order with 336 right there. Trade. All right, 5 contracts, 83 cents, 38.50. Boom shakalaka. All right, make that update there. I have one more to do on OXI, and then we can start running through some analysis. So added 12, 13, expiration 38.50. Covered call for 83 cents credit. So that brings my break even down. 38.30 minus 83 cents, 37.47. Okay, so if it gets called away at 38.50, I make $1.03 on 500 shares, make 515 bucks for next Friday. Next up, we have OXY. We're trading at 50.44. This one, I've lowered the cost basis a decent amount as well. Own the shares at 51.10. Okay, 51.10. So OXY. How many accounts do I have with some OXY? 1, 2, 3, 4 accounts with it. Okay, so 51.10. This one, let's see, same thing, 51.10. I need to go a little bit further for some more. Let's go end of the year, December 27th. Let's see. That's going to be deleted. We've got a lot of support here around 49.50. I can get $1 So 5110 minus 94. Let me just do the math here. So 51.10 minus 0.94. Get it called away at 51. Make 420. It's not bad. It's not great. Not my favorite. Not bad. I could repair this at 50 bucks. It's going to be tight though if I do a 51.10. Take the $1.44. I mean, that's a pretty big premium actually if I get it called away at $1.44. So 49.66, get it called away 50 bucks times 500, make 170. That's really the repair trade there. Will price get back above $51? That is what I'm debating. I can always roll it. 50 bucks. I'm just gonna take the repair. 50 bucks. So this gets it called away roughly around 52. This gets called away around 51.50 when it's a net call away. Let's see. Let me see if I can get $1 out of this 51. So I'll try this one here. So this account, let's try the $51. I have 500 shares. Give me $1 out of this, will you? Okay. Filled at $1. All right, that's not bad. Similar. So 9732. Filled there. Oh, come on now. You're not going to fill me at $1.99. Filled at $1. Good. Ha. I snuck it in there. Who else? Not that account. Okay, that one. All right. Sorry, I'm just running through this stuff really quickly. I looked at this on Friday. I was trying to do this on Friday at 3 in the morning in Melbourne, but the markets closed at 1 p.m. So I wanted to make sure I put it on the to-do list for today. All right, so you might get filled at $1. Filled at $1. Very nice. That one's fine. 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 Okay. That should cover all of my positions for JD. So now, or I'm sorry, OXY. So I have 1, 2, 3, 4 with 500 shares, and I have 1, 2, 3, 4 covered at 51. Excellent. All right. Last thing on my spreadsheet, and then time to rapid fire off some requests. That is a 12/27 expiration, $51 covered call for $1. So the break even is now 50.10, which would give me 90 cents a share. All right. So I got that going for me. This is now a 12/27 expiration, $51 covered call. Boom. All right. And we've added in hedges on ES. If the melt up happens, great. Let's take a look at where we are overall. Just really quickly on the notion of, why do I think the Fed can disrupt the market for the month of December? And again, it may not. Statistically, let's just type up a couple things here. Statistically, you go back from 1928 to 2023. It's a lot of years, obviously. 74% of the time, December is a bullish month. Now, the definition of bullish means we just have to start and finish slightly higher. Doesn't have to be a huge month, doesn't have to be a big percentage gainer, just has to be, is it bullish? So if we open today and we close by the end of the month higher than we are today, that's fitting in this statistic here that 74% of the time the month is bullish. Okay, now December 18th is the FOMC, end of year meeting. So just some big notables on the Fed. 62% probability the Fed cuts 25 basis points again. So we had 50 in September, we had 25 in November, and this would be another 25 for December. So if the probabilities remain high right now, 62%, they were as high as 80+%. They've dropped back down a little bit the last couple of weeks, but that would put the Fed in line for a 100 basis points of cuts since September. Right now, the market is only expecting 0.41% of cuts in 2025. Right? So that's likely maybe 1 to 2 cuts all year. Right? The Fed pause and the Fed pivot is potentially bad. Well, it's not necessarily bad, but it's potentially a change to market expectations. I think that's the best way to put it. Right? The market expected to see, more cuts next year, another 5, 6, 7 cuts at 25 basis points each, another, 1 to 1.5% of cuts. That's changed to maybe 25 to 50 basis points of cutting in 2025. Right? So more than likely, December would be this. According to the Fed Watch tool right now, the market sees another 25 basis points of cuts by the Fed, and they do exactly what they say they're going to do. They go into 2025 and they pause. It's data dependent. We have a new president. We have a Republican House and Senate and president. We'll see if policy starts to shift. We've got a debt ceiling coming right out in January. All these things get hit pretty hard. We could have a bit of a first part of the year correction. We'll see. Anyway, all these things are speculative. But point is, based on the Fed, path of least resistance right now post-election is we melt up, and we keep melting up. Now, the S&P's notched 54 all-time highs. We're up like 26+% for the year. As an index, that's pretty darn good, So with the seasonality, I don't see a lot that disrupts this pace or this melt up, but I could see the Fed being potentially the coal in the Santa rally, because if the Fed is vocal about pausing, vocal about being more neutral, no reason to cut rates further, the market may not like that. So we'll see how it gets priced in, how it gets reacted to, right? All right. So just want to throw that out there just so we know what's going on for the month of December. Other than that, I think more melt up is fine. More melt up is fine. More melt up is easy. If I'm wrong on some of my hedges, that's fine. This is easy money. This is where I don't want to be surprised to any type of 2-3% move to the downside, 5+% move to the downside. We'll see, and the market can have some type of weird reaction by the end of the year. Who knows? But everyone's expecting, tax cuts and tax breaks going into 2025 onwards. There's going to be a lot of deregulation. Capitalistic mentality should be favorable, but I think the biggest threat is tariffs. If we're going to get crazy amounts of friction or add friction to the global economy, it's going to be inflationary. I've said this for the last couple of months now. Anybody that's been watching these live sessions with us, going into the 10-year yield, this is the one thing that needs to continue to have lower lows. If this goes lower, this is good for the U.S. economy. If this gets back up to the same levels or goes higher, this is bad. So down is good on the 10-year. Okay. Up is bad. Now, this is on the 10-year yield, not the bonds. These are inversely related. Bonds have been in one of the largest drawdowns ever and one of the longest drawdowns ever. Does that mean that I want to get long on bonds? No. It just means that they've been performing like garbage. Granted, the yields are better now, but they're still performing like crap. So bonds, are at somewhat attractive levels. I mean, we had the 20 plus year, at 82.67 is up to 93. This could be a pretty nice double bottom. I mean, if we came back down into this area here, my concern with the bond market is that we break before we stabilize. That the yields go up and something breaks in the yield market that then breaks the bond market, then the bond market has like a good bullish run after something breaks. So I don't really want to be in the hook for something that has to break before I get into it. So I'm just going to hold off, but I'm just watching that 10-year yield very carefully. I think that's a big catalyst for where things go moving forward. This is not good. This is better. I don't know what's going to happen, right? Clearly the Fed cuts in the market, bond market, yields wise, ripped up, 70, 80 basis points. The average mortgage rate right now is 6.8% when it was down to 6.09 going into September. That's a big change. And that's the change in the wrong direction, right? So we'll see how that also factors into the end of the year. Price of currency slowdown. Yeah, I just call it the holiday drift. Basically, what's set in motion stays in motion. So if we're talking currencies right now, I get into the dollar index, we're at 107. Okay. There's an opportunity on this dollar index. I would say as a swing trade, I definitely wouldn't call the top on the dollar, So, I mean, I look at this low. I could see a potential topping pattern. Okay. But in the event that we had this high, this pocket could still be tested. We could have price making a run up towards these highs again and getting more indecision. We had this big bear trap down here, this multi-month run on the dollar. If we have more choppiness before it kind of tops out, I'm not calling tops or bottoms on anything. Right now in December, why would the dollar top out here and then go lower? That would essentially be a top in December for the dollar. I could see January of next year making more sense as far as finding a top or a bottom. So I'm a little bit hesitant to say that I want to take a swing trade and short the dollar. Okay, what I am doing on some of my crosses with my pulver alerts on the currency pairs is I'm using open spaces, I'm using smaller trade sizes, and I'm giving the prices room to move. I'm not trying to be super precise right now on pairs like Aussie dollar, New Zealand dollar, dollar CAD. I'm pretty open on a lot of those trades. I've got several hundred pips I can work with. Okay. What would break the bond market? The 10-year yield. What would break the bond market is the Fed stops cutting and the bond yields rip higher and it chokes out growth and thus, translates into weakening stock prices because the markets look at it like the cost of restructuring debt, the cost of borrowing, the cost of doing anything with financing longer term is going to be squeezed out. So that's like the kind of quick snowball into why the stock market could top out and see that there's not as much growth ahead. At least in the broader market sense, there's not enough growth ahead if we're going to see higher yields. Okay. All right. So anyway, taking a look at the dollar index. This yellow box is where I could see, where I'm looking for topping patterns. And so it, wasn't a surprise. We saw a nice little snap, right there. It's like we tested this pocket for the first time. Okay. So it reacted to it. But if we're going to see a truly weaker dollar, then the dollar weakness to me is not about calling the top right here, but rather seeing the dollar follow through with that recent low we just saw and then actually have it go down. If you want an easy trade in the dollar to let price just prove that you're correct, that's where I'd trade the dollar. Let me box this in. I'll make this a little bit bigger. If I'm right on the dollar, I'm not going to try to trade the noise of, oh, it went up, it went down. Is this the top? I'm not going to call the top. If we break and go to fresh lows on the dollar, that to me is where the dollar proves it's going to get weaker. Okay. So I'll put, this would be confirmed bearish. Okay. So confirmed bearish window would be let me find a price point here. From around 105.50 down to 101. 105.50 to 101 is my bearish window. Okay. Bullish window. I'm sure you could argue that you want to be bullish on the dollar right now. We've got other central banks that are potentially cutting more. I mean, in the near term, you could have a very quick move on the dollar where we could say from current price, you have a stop loss below that 105.50 zone. If the dollar gets stronger, we go back to the highs at 108. We potentially fill this pocket up to 109 and change. So either this or this for dollar bulls with a stop loss that would be relatively tight. You're looking at a stop loss. If you're bullish on the dollar, you're looking at a stop loss right in here. There's your risk. It makes sense? So for dollar bulls, this little red box is my risk, and the blue box is my reward. And I mean, this is maybe wishful thinking, but the dollar bulls could act even more aggressive if they wanted to. Everyone that's trying to be short the dollar could be disappointed when this thing may have the ability to get back to 114. I know that's a lot of bullishness on the dollar, but all that really is doing is going from a major level of support to a major high. That's all it's doing. So for me to say that, no, this has to be the top, why would that be the top? That doesn't have to be the top of anything. This could be support. This could be resistance. If I'm a seller of the dollar, like, why not sell it up here? Sell the crap out of the dollar up here. If I'm right and we actually show the dollar's getting weaker, then yeah, we could participate here on smaller time frames. But I think right now the easiest trade, path of least resistance, what's put in motion stays in motion, holiday trading, thinner volumes, not looking for tops and bottoms necessarily. I could see the dollar drifting back up towards these recent highs, possibly drifting back up into this yellow box. So point is, I don't want to call the top on the dollar. Okay. Do I think the Kiwi dollar goes into the 40s? Not necessarily. And if you look at the Aussie dollar, look, I think the Aussie dollar has room to get down to like 62. I could see the Aussie dollar maybe getting as low as 60, but not too much lower than 60, in my opinion. I mean, unless the dollar is going to be incredibly weak and the play against China is going to be like China's getting just beat up so badly, then yeah, maybe that hurts the Aussie. But I mean, we have a range here. Look, we had a 2020 flash crash that the Aussie went down to 55. I don't see a COVID flash crash low in the Aussie putting us any lower than that. So I mean, I think we're pretty well supported at 62. 60 is a nice round handle. Flash crash level at 55. It's like, look, if you trade small enough, I'd still be interested in kind of scooping up some Aussie dollar longs and staying long. Like, I'm going to stay long in this trade. I'm fine with this trade, but I'm trading it really small. Same thing on New Zealand dollar. Okay, New Zealand dollar, also some pretty good range levels, pretty well supported back into 2020's crash around 55. 55 back here in 2022. And now we have an intermediate range between around 50, let's say 5,800 and around 63 and change, 63.50. So I'm trading this area. I'm trading small. I think this is 4-year support. I think that's a pretty solid play. So I don't have to be perfect on calling the top or bottom in the dollar. I'm just going to trade small and trade currencies that have really good structure and then give them time. Okay. All right. Dollar CAD. Dollar CAD's trading at 40.83. I got filled on 3 of my breakout positions all the way up to the highs at 41.81. So my 40.25 is filled, my 40.75 is filled, my 41.50 is filled, and I will let them just do their thing. We've had a multi-year breakout here. We've had range highs since 2022. You look further back on the chart, we've got this high in 16 and this high in 2020. So all I have is a measured multi-year range. I'm projecting that move up towards 4,500. If you want to look left on the chart between 45 and 46, that's my profit target. So I'm bullish on dollar CAD, and I will remain bullish on dollar CAD. All right, oil. I did check that the pay at the pump prices on oil. That is going to be a big important factor moving into 2025. If the Fed is going to see better inflation numbers, they really need to see energy prices stay low. Like pay at the pump is a big deal for the consumer. It needs to stay low. I looked at AAA fuel prices here, just something to watch. Notice how a year ago 324, a month ago 311, a week ago 305, 305, 304. If this current average continues to go lower, that's a good sign for the consumer. But if we start to bottom out in current averages and start to go higher than we were a month ago, or higher than we were, let's say a quarter ago or a year ago, that's going to be kind of the bottom in gas at the pump prices, and that's going to be sticky inflation, and that's going to be the Fed, trying to justify we want to get back to 2%, but they're just going to be a long ways from it, and that's where the Fed no longer looks to be cutting. The worst mistake the Fed would make is if they raise rates. If they raise rates, that would show that they've completely messed up this entire monetary policy window that they've had for the last couple of years, because this has been the first time in history that inflation's going lower and the Fed's actually raising, inflation's going higher and the Fed's cutting. They've never ever done that in the history, but we did that the last 4 years. So it's kind of backwards, and I'm surprised the market has gotten away with just making all-time highs for the last couple of years. That nothing's actually broken the market yet. So you can thank AI and Mag 7 and other things, but I don't think we can continue to see a very narrow bull market that is led by so few stocks, and that the market's going to get overly excited about it. So I think at one point that runs its course, and we see a bit of a reality check in the market. So oil prices again pretty well supported, and I just see oil prices going one or two ways, right? We either hold this level and we bounce back up, or we break the floor and we fall. I mean, that's it. It's like there might be nothing that happens. Oil might continue just to do this. It might get really, really choppy and very quiet, very narrowed, but at some point this is going to explode into some direction. The pressure's been down here since 2023. We tested the low, we tested the low, we tested the low, and now we're making lower highs to go along with it. So I think the pressure remains lower and lower and lower and lower. And if this floor ends up breaking, we go down towards $55 or lower, right? Now that looks good for inflation. That just looks bad for oil prices globally. OPEC has meetings this week. What's their output? What's their discussion? Are they going to cut? Saudi Arabia wants to see lower oil prices. US wants to see lower oil prices. Why? Because they can. They can operate at, sub 50 a barrel and make money. Other countries can't. So I think with lower highs and equal lows, this is on the verge of a break lower. If obviously I'm wrong and it squeezes, right? It squeezes here, then okay, fine, that makes sense. But that's not good for inflation. So if inflation numbers are going to improve, oil is probably going to drop. Inflation numbers get stickier, oil prices rally. Energy is a big factor here. Okay, gold, we're trading at 26.40. I still like gold to the upside. I just think you need to be patient. Okay, don't be surprised if gold has a bigger flush. We've had a crazy good bull market on gold. This is the first real correction we've seen all year. Sideways was just a pause. This was the first time we actually see what could be a correction. So high, low, lower high. If this continues to go lower, that's fine. I'd love to get some gold longer term positions. I've been saying this for a while now, 25 and 2400. If it goes lower, just more of a bargain. But I'm going to stay bullish on gold overall. I'm just trying to stay patient with the timing, patient with the prices. I'm not chasing at these current levels. I'm not crazy bullish or bearish. I'm just going to let price do its thing. If I'm going to buy more gold, it's going to be at lower prices. Silver, pretty similar. Silver to me is really well supported at 26, so I'll wait. Bitcoin, as high as 99.8. I know we hit the futures Bitcoin spots at 100,000. This price here has not hit 100,000. That's another potential milestone to celebrate for the rest of the year. Is do we get over 100K? Do we get over 100K with some conviction? Do we run up into the 100,000+? Do we have a correction based on this symmetry that I measured? Does this 107.8, 107, 108,000 mean anything? Maybe, maybe not. So I'm bullish on Bitcoin. There's obviously some inefficiencies in here that I think will get tested. So if we end up going maybe sideways for a bit of an accumulation here, maybe another bull flag, and then we get another blow off top. That's okay. But as a blow off top just run up and then show a price pattern that gives us efficiency, and then you want to buy in more at a better price? I don't know. But longer term, I like Bitcoin. Okay. All right. Stock wise, micro strategies kind of come back to reality a little bit. Ethereum spot prices is creeping up there. We have recent highs around 4,000 and just above 4,000. We have all-time highs around 4,800. Ethereum's made a pretty good run. I've got some profits running in on this this EETH. This is an ETF that I can trade some options on. I need to stay above $60, and it is. So that's looking pretty good. Copper, the whole story on China, Mag 7, where are we at? Apple, fresh all-time highs on Apple. I'm going to get it called away. Maybe I could do another roll by the end of the year. In fact, let me see if I can do that here. Let me see what Apple's going to give me. Apple, let me see. So Apple, I have 100 shares. I have it covered at 230. Could I do a quick roll on this? Let me find out. So if I rolled this out by a week at the same strike price, I can get 60 cents more profit on 100 shares. It's only $60. I mean, it obviously it adds up. It's outside the expected move. If I roll this out to the end of the year, oops. So let me go December 27th, get another $1 on that. That's not bad. I think I'm going to do that. I can grab another $1. Let me see what that gives me. So 223 is my break even. So 223.35. If I get another $1, get it called away at 230, I make $765 per contract. I mean, I make a nice little income play there by the end of the year. Okay, I think I'll do that. I'm going to do a quick roll on this one. Keep the same. Yep, I'm not going to pay a debit to roll it, so I'm going to keep it at 230. Roll it out to the end of the year. And let's see. I go from the 13th to the 27th for $1 extra. I make $100 more. You know what? For the peace of mind of not worrying about the Fed and the disruption, that's before the Fed even. I mean, it's fine. I get it called away and make like $7 and change, right? I make $6.65. I don't know. Let me come back to that. I'm going to think about that again. Let's see here. What stock are you talking about? What stock do you own? Oh, OXY is $60. I mean, I wouldn't buy more now. I mean, I think this. So OXY, I want to be aware that this thing could drop into the 40s. You know, we're at $50 right now. If it drops down to like $43 or even fills this bigger pocket around 41, if I'm going to buy more shares of OXY, I'm buying it down here. Buying it down here, I'd say between $43 and $40. That's my next kind of level to buy. If it holds here, I mean, it's doing exactly what oil's doing. If it holds, then maybe we go higher. If it breaks, there's certainly room on oil to drop, you know, $10 a barrel. We could see OXY reflect that and drop, you know, maybe $5 to $10 a share. So I'm not looking to be super aggressive on buying more shares when this is a better price. Okay. All right. Currency strength wise, a lot of you asking for yen crosses. You got the dollar showing strength and the yen showing strength. So if you look at yen crosses, I mean, what are you doing with this trade? Anything? Who's short Aussie yen right now? My best alignment on yen pairs would be look at a 1 hour chart. If it's going somewhere, trade it on a smaller time frame. Trade what you see. Don't be a hero. I don't know what these yen pairs are going to do. You know, is there a BOJ rate decision right around the Fed this year? December 18th, we have a BOJ right after that. You know, I mean, there usually is some end of year seasonality to the Japanese yen. Be careful on it. I mean, as always, it's just, I know right now it's like everyone has been rewarded for a 2-year carry trade, but that can quickly go down and, you know, show some deleveraging. So Just be careful on the yen crosses. If I just do a spot check on the yens, you know, the yen's obviously getting stronger here the last maybe a couple of weeks. So, you know, my Swiss yen's finally rolled into profit, which is nice. Euro yen is, I mean, darn near down to the lows we saw back in September and the deleveraging lows we saw in August. Pound yen, kind of halfway in between. It's like, just trade what you see. I'm not doing anything on these yen. I don't have any exposure on the yen other than Swiss yen short. New Zealand yen, same thing. I mean, it looks like it rolled over after this chop. Just be careful. You know, dollar yen, dollar is strong and the yen is strong. I think the dollar yen is going to be stuck between this range. There's the high, there's the low. This is not the spot that I want to trade the dollar yen. You know, if this is a topping pattern, okay, maybe this is a topping pattern. Measure the move, get some pressure to the downside. Maybe it comes back to the lows, but I think this market could stay incredibly volatile without doing any type of damage to this top or this bottom. And you're just going to be left wondering, like, what do I do with the dollar yen? Probably freaking nothing. You know, if it's all noise, like, you're just going to get beat up and chopped up. So I would sell the highs. I would buy the lows only if they're confirmed, only if you're looking at price patterns, only with defined risk. I'm not trying to level into yen crosses and be wrong. So in the middle, I'm not interested in trading this stuff. Alan, no, I trade everything, man. I trade stocks, options, trade lots of futures, ETFs on those stocks. So trade everything. All right. BRC, I saw somebody ask for. Is that the right ticker? BRC, somebody asked for that earlier. I mean, you're sitting here in your all-time highs, wait for a pullback. ATGL. I don't even know what that is. Total Gas Limited. What do you do with it? Is this right? At $772, this looks like it's trading like a freaking penny stock. So I don't even know what this is. You know, do your research fundamentally. Is it fair value? What's discounted cash flow model showing? Where its peers at? What's its price to earnings? What's the price to sales? Technically, maybe there's an opportunity in the 500s if this is it, but I don't know. I don't love it. That price point is insane. You go from a $4,000 stock to 700 and change. So why would this look attractive when it's down 80%? What has been the reason that this stock has dropped 80%, if that is the right stock? Nike. Nike at 78. I went long Nike when we first had that big sell-off. I put in some puts. I think that exposure is done now. I think those puts expired for like 90+% of the credit, or they expired for full profit. Let me see if I have any exposure in Nike. I do not. So my trades have already expired on Nike. Nike's good. I mean, I like Nike overall. It's like, it's a household name. Any added friction with China is probably not a good thing for Nike, but fair market value. I mean, we're down from high to low. I mean, Nike's down 55, almost 56%. We take a look at fair market value. I want to say the stock should be trading in the 90s or so. I mean, earnings are forecast to grow. They've grown. They pay a reliable dividend. There's not a lot of risk fundamentally. That's a good thing. Price to earnings, price to sales, not outrageous. You know, it's not dirt cheap, but this would be a reason to hold off. Or if you want to own Nike, just know that pulling back into the 60s would be something I'd want to be owning more of. So if I bought Nike at 78, I've got to be willing to buy it again at 68, 65, $60. So that goes back to our COVID crash low, which was Nike around $60. So do I love Nike right now? No, I really don't. But if we get it into the mid 60s or low 60s, then yeah, I think Nike's a great opportunity. For what type of upside? I mean, they figure out their stuff logistically. It's still a household name. Then we go from 60 maybe back to 120. Not a lot of stocks you can see for technical 100% upside that is a stock that fundamentally is pretty strong. Okay, Shiba, Doge. I'm not analyzing those, dude. Just protect your profits if you have it. I have no play on any of those, and I don't even know what they want to do outside of the fact that the altcoin, meme coin, crypto market, it's as stupid as it was back in 2020, in 2021 and 2022 before we had a legitimate bear market. So if you got profit on things that have no real value, I would say protect your profit. New Zealand CAD, somebody asked about New Zealand CAD. I just think we have a big range trade. You have a high up here. You have a low down here. I'm looking to see if the market just continues to kind of chop in this area. Pretty good resistance level to sell, support level to buy. That's all. But just a big range. Low around 77, high around 88, and it's been staying in that range since late 2022, 2023. All right. That being said, okay. Any other thoughts, questions for me? Otherwise, I can wrap things up here, and we'll be back tomorrow. I'll be back tomorrow. Team, do we have anybody else coming in after me? I'll take some more requests here for a few more minutes. I might do that roll on Apple. I know it's not making me an arm and a leg of profit, but another $100 is another $100, and it's on 9 accounts, so it's like throwing an extra grand at the portfolio, which is pretty doable. Tesla price looking pretty good. Nvidia, just doing some of the household names here. You know, Apple up to fresh all-time highs. Amazon creeping up to some fresh. So 215.94 all-time highs. I've got a covered call at 210 actually out to January. I might do some rolls on that next year. Google looking better for some bull call spreads that I have. Meta. I've got some income plays here. I did a 111 on Meta. Ooh, Microsoft looking better. All right, Microsoft. Google, I actually might add some exposure on Google. I've got a 160 and 165. Those are December and January expirations. I'm just going to hang on to those and see, as long as price stays above 165, those should be good for profit. Meta, probably not anything on that one for right now. Microsoft looking good. I do need to see if price can get above 435. I like Microsoft a lot cheaper, but if it is going to revisit these all-time highs again, that's not a bad little runner. Netflix, I really want to pull back on Netflix, so I'm looking at some 111s on Netflix as well. Nvidia, I've mentioned this before, but I will say this again. Because of the distance we have gone between hitting the 200 moving average and the stretch away that we saw right here, do not be surprised if Nvidia struggles to go higher. I think Nvidia is going to struggle. Okay. I'm not saying it's not a good stock. I'm not saying that it can't have more interest, but personally, I would almost rather see Nvidia just either stall enough that my 200 moving average catches up to it and then it gets bought up again, or Nvidia pressure turns, a little bit more to the downside to find those deeper corrections to then offer up a better chance to buy it. So I'm hoping that we at least have a pullback on Nvidia to buy some dips. Otherwise, I don't see Nvidia going too much higher and just staying very, very choppy. Eventually, this catches up. We have a fake bear trap, and then off we go. So we'll see, but it's going to be patient. I mean, obviously, I know the whole world loves Nvidia right now, but I'm just trying to wait for a better price. Tesla, I mean, just crazy post-election move. And if I can get any opportunity in the 300 to 270 zone, I'll probably add some more exposure on Tesla. Otherwise, I already have a decent amount. I mean, Tesla for me right now is currently up around $9,800. And that's with owning 0 shares. It's just all options. So I'll see if there's more to go. But I just want to see mostly these trades hit profit. A little bit more time is needed. Berkshire Hathaway tapped some fresh highs. This is another one I'd be watching. If we hit some highs, hit some lows, just looking at some pullback opportunities on Berkshire Hathaway. This will be interesting. They're buying spree. If we see a correction in the market, They have been a net seller of stock over the last couple of quarters. That's made major headlines with, Apple shares being dumped by Berkshire Hathaway, Bank of America shares being dumped, and a couple other ones. So I think it's good that they have the cash at the ready. But if we have a healthy correction, that doesn't just mean that they're going to be right. It just means they're buying things on sale. But if you have cash at the ready, you can do the exact same thing. So do I want to trade Berkshire Hathaway? Not yet. We pull back into the 200 moving average or pull back to these levels we saw back in early November, then yeah, maybe. But nothing right now. Then bonds, yields, like I'm saying, watch that 10-year yield. That's a really important thing to watch. How does that translate into 30-year mortgages? We'll find out. When it comes to China, HSI is green on the day. Alibaba, Baidu showing different trades. I added in some credit spreads at these lows on Baidu, FXI, KWeb, JD, just watching, adding. Potential analysts here outside of China could still be lifted. I'm not trying to be super greedy. I'm just trying to see if there's a follow through from that push we had in September. Gold and silver, as I mentioned earlier, just waiting for dips. I like gold longer term. I'm not trying to be short term. Gold right now, we had a decent correction. I'm looking to see if this wants to go high, low, lower, high, lower, low. That's another reason the dollar could also run. The dollar could run a little bit hotter. If the dollar goes higher, gold probably goes lower. The one thing that's been interesting is we've seen dollar strength, Bitcoin strength, gold strength. That's usually not the correlation that we see, right? So something's going to break. And so far we saw gold has been the thing that's broken right now. So to me, this is just more of a corrective phase. I'm not long on gold. I got long here. We hit the 100 moving average. I started to add some exposure. I traded GLD with credit spreads and I bought some more shares. With SLV, I traded some more shares. That's it. If gold wants to drop lower, that's fine. I'll add some more exposure down here between 25 and 2,400. Okay, promo for Black Friday. Ask the team. It's Cyber Monday, so I'm sure they're still extending something. There's pullover alerts available. There's A1 Edge Finder. There's Stockbox. There's gold memberships. It's Cyber Monday. I'm sure there's a link. All right. I'll wrap it up there for today, and I'll be back tomorrow for more. All right, thanks, everybody. Have a good Monday. Let's have a good week. See you soon. Bye.